Aren't you interested in learning breakthrough wealth building strategies, such as how to flip a home in less than 2 weeks using other people's money with no real estate license, or how to build a low-cost home-based business? You can discover how to take passive income from any source and invest it into real estate, stocks, or business to become financially independent investing in any market with Residual Roads Business Institute. Collaborate with Andre and other Residual Roads advisors to create a free action plan and start implementing strategies today. Go to www.residualroads.com or email info@residualroads.com. Welcome to the Investing Uncensored podcast. You've been searching for different ways to become financially independent or generate passive income to live out your life's purpose as you've seen others do it, but need insight on how. Well, get excited because here you'll discover the tips and resources to fulfill that need. Andre Stewart has spent more than a decade successfully making it happen for himself and others. This is the Investing Uncensored podcast. And now here's your host, Andre Stewart.
Welcome to another episode of Investing Uncensored. I'm your host, Andre Stewart. And today I'm going to talk to you guys about a couple different things. The CPI report, inflation, the housing market, some stocks I think you guys should be investing in, and the economy overall. Please keep in mind, this is not investment advice. It's just my opinion, and it's kind of what I'm doing. I'm not saying that's what you should do, but it's been working for me, so it's up to you guys. But if you guys have listened to my podcast for the past year, then you'd be up right now. Your portfolio should be killing it because you'd have been in commodities, and you know inflation is here and it's hot. The CPI came out, and they said it was like 8.5, which we know the actual. And you've heard me say this before. I told you guys it was going to be at either 8 or 9. I said it. So if you remember me saying that, the actual number is probably more like 18 or 19%. You know what I mean? And so we know that in the next month, because the economy has a lag, it's probably going to be around 9.5 or close to 10%. If that's the case, then we are headed into hyperinflation. And they don't want to say that's what it is, but it is. We might not have hyperinflation to the status of what Venezuela and Weimar Republic had, but we had it. So if you guys followed me all the way back from when I initially started recording, I talked to you guys about oil and gas and commodities over and over and over again. And those things are killing right now. And we're still early in the cycle, especially in things like uranium. So a lot of things that I'm doing, I've ran up. I took a long ride with all of these from 2020 and to now. And so I'm still, I'm trying to trade out of certain things like MOS. That's a really good one. It's fertilizer. I might stay in it longer, but I've rode it up. I mean, I've been in it at $20 and now I'm at 70. And so it's really high. But I'm going to keep riding it out like I'm doing. But uranium is super cheap and it's beating up right now. And some of the uranium stocks that I got in those at $1 and they're at $6. And so they have a long runway. And so you don't obviously want to have your portfolio balanced. So initially I had a ton of oil and gas. Basically the whole 2020 I had nothing but oil and gas. And then I had gold, and then gold kind of hit its peak. And then I started just, being more overweight in oil and gas. So I wrote that up. And, on my last podcast, I kind of told you guys about that. That's still a good play. It's still a good play. But the run from where I got in at 35 a barrel to where it's at, I think like 116 a barrel is completely different. So that's kind of what I think you guys should be focused on. Focus on stocks that are kind of on the lower end, like uranium, which are $2 or $3, but they're going to go to 15 or $20. I kind of think that's where you guys should be at. And there's still fertilizer companies out there that I'm just now getting in because MOS did run so hot and it's at 70. So that could be expensive for some people. But if it's at $70 and it goes to 110 or 115, is that really expensive? Obviously, like I said, I got in around $20, $25 somewhere in there, and I'm at 70. It's still good, but I can ride it. It's not like I'm using all the profit that I got from 20 to 70 to buy from 70 to 110. But for those people that didn't get in the fertilizer play early on MOS, you can get in something called Tech. It's TECK. You should look it up. Right now, it's at $43. I got in this one at $40. And it's only been, I'm looking at my Robinhood now, I got in there on April 6th at $40 and now it's at $43. And I did options and I bought shares. So for my stocks, I'm up 6%, but on my option contracts, I'm up 40%. So, and I did my option contracts all the way out through 2023. And I did them for a short. So I did a $45 strike price for January 2023. And then I did a $50 strike price for January 2023. So I did a couple different strategies. But if you look at the price now, it's at 43 and I got in at 40. And I'm already up, like I said, 36%. This is what I think you guys, if you want to play the fertilizer play, I would get in on this. Again, this is not investment advice, but if you look at what it does, it's an amazing stock. It encompasses more than just fertilizer, which is why I like it. So you got to think when you do pick a stock, it is great for you to be able to pick something that has multi-utility. So this one, for instance, it does mining of different minerals. So it does copper, coal, zinc, and it also does fertilizer. It does silver. It does lead. So these are all the things that we're going to need in an expansionary phase like we're in right now in the economy, where we're recovering from something that was traumatic to the economy. So we're in an expansion phase. So all of these things, and they're all commodities. So these are very, 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 to me, this is very, very cheap right now for you to get in, especially considering that we have a supply chain disruption. Shanghai is down. They have it on lockdown. That's going to also keep the supply chain even more disrupted. So this is just going to continue. And so I was watching a couple different things on TV where I saw Sri Lanka. They had no oil and they ran out of fertilizer. The same thing in Peru. People were protesting in these two countries because they didn't have any oil and fertilizer prices were either super high or they didn't have any at all. And this particular stock encompasses all of this. So this is why I think this will be a good play for you to get in right now if you don't want to hop in on MOS, which is $70. I still think that's a really good one. And it's a US-based company. If if that matters to you, it's still a good play. It's at the highest that it's ever been, which is not a bad thing. But like I said, at the rate of what these economies are doing, not just on the US, but the entire global economy, that thing is probably going to go to 150 or higher, just considering the factors that drive that. And so if you look at TECK, it's very similar to what MOS does. So if it's at $43 now, why wouldn't that one go to at least $70? You see what I mean? So, I mean, if you want to play the fertilizer play, that's what I will hop in. And it also, if you want to play silver and other commodities like copper, that's why I would do TECK. But back to it, with inflation being what it is, you guys got to know that the cost of everything is going to continue to go up. You will hear me repeat myself over and over on different podcasts because, I mean, I think that's the play. A lot of people like to go and get into, tech stocks because that's the thing. But if you look now, all the people like the major firms are hopping out of tech. Honestly, the S&P has been in a 30% decline. It didn't crash. I don't know if people are looking for a crash like they saw in 2020, which will never, ever happen again. That was a unique experience for our times in modern history. Obviously, something like this happened years and years ago, but we've never experienced. So that crash will never happen like that. But I don't think people see that the market is like 30. The S&P is down like 30% from the highs. The NASDAQ is down 50% from the highs. So we are crashing. It's just not like this overnight crash that people might be thinking about. So everybody that was in those stocks, they're rotating. The smart firms are rotating in the value stocks. Commodities were beaten up very bad. So now that's a value play because these things are super cheap for the amount of value that they're going to bring because the cost of everything has gone up and with inflation going high. So that's why it's a value play. So instead of paying $200 for like an Alibaba, which is still right now a good buy, I'm going to touch on that in a second. But instead of paying, a lot of money for something like, let's say Tesla, you can get in something like, again, TECK. It's 43. It has a very good P/E ratio. That's what people are doing. So the smart money is rotating into value plays because they're going to do the same thing. They're going to 10x or 100x their money just by rotating out. So this stuff happens. You heard me might have said this on the previous podcast that the markets have cycles and it has rotation. So the rotation for March took place and now it's obviously going and it's taking place now. So the next rotation out of inflationary stocks might be in September. And that's when people might rotate back into tech. But with them raising rates, and they have to continuously raise rates because of inflation, they might be in commodities a lot longer. And this is what you might call a commodity super cycle, is what we're in. People say we're not there yet, but we're 100% in a commodity super cycle based on all the factors that we have that are driving it. So if you want to look that up, watch a video on a commodity super cycle, you'll see why it's important to get into commodities right now, because we're at the very beginning. And commodity super cycles normally last about 7 to 10 years. So even if you think about us trying to go to green energy, there's another stock called BATT. I would hop into that one. It's very cheap right now, but if you think long term, look at that stock and look at what it has in it. It's a lithium ETF. So look at all the stuff that it has: cobalt, it has nickel, it has all the things that we're going to need, especially if we're trying to go over to a green economy. So it's very beaten up right now. That thing can go to at least $300 or $400. Actually, not. It will at some point in time after we get through the phase that we're in right now. So I would kind of gradually load into that one, and just sit on it, because it's only like $18. So grab that, sit on like 2,000 or 3,000 of those over time, and it'll pay off. Especially because, again, they're trying to go to zero emissions by like 2029 or something like that. So that'll be the play. Don't go for the home runs right now. Go for things like what I'm telling you, the value plays. Go based on what you see in the economy. I just gave you 2 great stocks. I'll give you a couple more. Again, this is not investment advice, but if you look at the ones that I'm telling you, I think you do good. So I gave you TECK. I gave you BATT. I gave you MOS. I think that's a good one. I think you should also do AUY. That is Yamana Golds. I got in that one back in March 7th, and I am up 38% on that one. And I did a bunch of different contracts for that one. I did long-term plays. And obviously, gold is an inflation hedge. And that's where we're at. Inflation is going to keep running hot. They keep saying, inflation is peak, but that's almost impossible because we still have the war going on. We still have the economic data that has a lag. Oil prices were super expensive for the past couple months. They've only factored in the month of March. We still got to factor in the month of April. That comes out next month. So there's a bunch of different factors that are going to come in. And then you got to think people are going to be out of school, or kids are going to be out of school in the summertime. So these prices will also increase even more. So I've always said that I think we're going to be in a global recession by June or July. We're in April right now, and the economic indicators are already there. And I told you guys before, by the time the Fed or the media tells you that we're in a recession, it is too late. It's already on your front door, and it just kicked the door in. I'm telling you guys, we are in a recession right now. Just because the news is not telling you, that doesn't mean we're not in a recession. We are in a global recession. The yield curve is inverted. Look at the jobs. Look at the economy overall. Look at consumer spending. Everything is down. We are in a recession. We are in a global recession because I talked to my friends in Colombia. I talked to my friends in Europe. They're everywhere. Everywhere it's the same thing. So again, we'll look at what I said, the protesting that's going on in Peru and Sri Lanka. These are all across the world. Like, it's here. So don't sit around and wait for the mainstream media to come out and tell you that we're in a recession. Look at the data that I'm telling you. Look up the consumer confidence. Whenever consumer confidence is down, whenever the yield curve is inverted, these are all factors that we're in a recession. So talking to my friend in Colombia, I'm actually headed to Colombia on the 27th. So I'm going to be boots on the ground. I'll probably do a podcast from there to let you guys know how that is. But from what I'm being told, everything is just super expensive over there. People are struggling. The government's obviously not like the U.S. being able to print and give out a ton of money because they just are not in that situation. But from everybody, everyone's like, man, this is so bad. Like, it's a struggle over here. It's a struggle to get food. It's a struggle to get everything. And the same thing in Europe. I think they went, and the cost of groceries in 3 of the largest supermarkets in Germany went up 50% over the weekend. Insane, man. So, like, depending on where you are, some countries can do that and some can't. The U.S. is just not one of those countries where they're going to allow something like that to happen. But in essence, I mean, it kind of did. It didn't happen over a weekend, but I was literally paying $3 and, like, I don't know, 80 cents per gallon, maybe a year ago, and now I'm paying almost $7. So That's 50% right there. But again, it wasn't an overnight thing. It did happen over the course of a year. But that's just giving you indicators of what I'm trying to do is let you guys know that this is a global thing and it's just getting started. So anything that I'm telling you guys now, as far as like the gold, a amount of gold, inflation is going to keep going. So you kind of want to get in that. I did my option contracts, like I said. I'm up 34%. I got in the stock as well. And on my last podcast, I told you guys how I buy the option and I buy the stock at the same time because it allows me the ability to be able to trade in and out and not lose my position. So that's kind of what I'm doing with the stock that I'm mentioning right now. Even ET, look at energy transfer. ET is a great one. Right now, it's at $11. It kind of is high as normally around $18. So you can get it on that one and do well. Another one, man, I'm up 67% on that one, and I've only been in it since March 28th. So I'm telling you guys, I'm not trying to give you guys advice on something that I'm not doing. I'm just following what's going on with the economy. And if you look at ET, it's exactly what we need. Obviously, we're in a energy deficit globally, so they transport energy. So, I mean, what better product or what better company would you want to invest in a company that ships the product that the whole world needs right now? You know, we're suffering from natural gas deficits. That's at an all-time high. If you look at natural gas, it's at when I started getting natural gas, it was at I think $4 and some change. Now it's at $7. And if you look at crude oil, what Biden did with the SPR, releasing those, that's not going to do anything. I mean, it's going to maybe drive the price of oil down at the pump temporarily, but then what's going to happen when we run out of the reserve that he released? They're only going to last us through, I think, the end of the year. So what's going to happen at the end of the year? Because if you guys don't know, it takes about 5 to 7 years to even get oil out of the ground. So if they use all of the reserves we have in the SPR, we trying to get oil from Venezuela, which is not going so well, and then the prince from Saudi doesn't want to answer our phone call. What's going to happen? Even with that, if you guys look, I was telling you guys about this, oil was at $98. Even with that SPR release, it only dropped oil down to $98 or $99, and it came back within 2 weeks, and now it's up over 100. I think it's like 110, 111, as I'm saying this on April 16th. So it didn't do anything, right? It did something temporarily. So what they're doing is temporary fixes, which is stupid. You know what I mean? Like they're just making this issue that we have a lot worse. So I think ET is going to be highly valuable long term, and it's super cheap. It's only like $11. That thing is going to the moon, considering what we have going on. And the only thing that the current administration is trying to do is make sure that they can get inflation down, because never in history has a administration been reelected if inflation was as hot as it is right now. And so that's what they're doing. They're trying to like decrease the pressure at the pump to see if it'll get them their chairs in the Senate and all that stuff like that. But it's not happening. It's over. They're out. But again, you guys know I'm not on either side. I don't care. I just try to go with what makes sense for me, and each side has its advantages. But anyway, back to it. I think you guys should look at ET. So I'm giving you guys some great companies that you guys should invest in based on fundamentals of what's going on right now. And you guys have heard me say, don't get into the housing market. Interest rates are going to the moon, man. Like I did a podcast where I told you guys, like, I think I did mention that housing prices were already getting cut in certain markets, and they were getting cut in California. Now they're getting cut everywhere. But the rates are up. The rates are at like 6%. And if you are trying to get into an investment, if you guys are trying to get into investments, yeah, I mean, that rates are like 8 or 9% for investment homes. So I think the wave that we have had in the housing market is coming to an end. And I told you guys before, I wouldn't buy a house right now. I wouldn't get it as an investment property right now, because the only way that I would do it is if I can get a pre-foreclosure or something like that. And we're going to get a lot of those. These housing prices are going to come down. I don't think they're going to come back down to 50% that they went up. They might come back down to 25% because there is a demand shortage. But mortgage rates are up. People aren't really doing as many mortgages. People aren't doing as many refinances. But the equity for the people is still in their homes. So you might get a lot of people. It might be a huge sale in the summertime. It could be. You know what I mean? But like what I think is that people are not going to have another place to go. And they can't build a house because of the supply demand issue. So therefore, it's not going to be a lot of houses. So even the people that did get that equity, they're not going to refinance because that wouldn't make sense. So then the demand issue is going to still be there. So I don't think we're going to have a housing collapse of 50%, but I do think it'll decline about 20 to 25% and to get, maybe 30%, which I think is still a good buy. Because again, that the price can go back to where it is right now. It'll just take a lot longer. But don't buy anything right now in the real estate market. Even I was thinking about getting something in Clearwater the other day. I was like, contemplating like, man, should I get something to put it on Airbnb? But I was looking at those prices, and again, they're overinflated. And I just not too long ago came from there, and I'm like, man, I see a lot of people that are doing the Airbnb thing, and it's like I can still get this. I can still get these from pre-foreclosure because I still think that we're in a recession, so people aren't going to be working, and people can't afford these homes. And some of these houses in Florida are second homes for some people. So we are starting to do mailers. We started a couple weeks ago. So I'm trying to get houses from that. But that is the only way that I'm going to get into real estate right now is through that process. And those I will try to get and turn into Airbnbs.
Have you ever thought to yourself, I wish I could get into real estate investing? You can change this as quickly or as slowly as you want to now. Imagine yourself networking and making new connections in real estate globally, or buying an investment property in a market or country that fits your needs. People do. They know what I'm talking about, and now you can too with InvestFar. Connect and join the network. Remote investing made safe and easy.
I even looked at some houses that to live in Florida, and somewhere, $500,000 or $600,000, even a couple $1 million houses. And before, these houses were like a house that I looked at in October was $500,000, and now this house is $1 million. I'm like, come on, man. So that's what I mean. I can't justify paying $1 million for a house that I just seen in October that was $500,000. So I'm just gonna wait, man. Even for the house that I want to get to live in, or for my family and friends to come in Florida, that's kind of what I'm getting it for. So people can come down for the holidays. I can't even justify getting it right now because of that. But anyway, I just want you guys to be alert, man. Let me see what else I can give you guys as far as stocks. And this is just one of those podcasts that I'm just doing on the fly because I haven't done one in a while. And normally I don't give you guys things to invest in, but I just felt the need. I would get in silver. I think gold is around 1970 right now, and silver is 23. Silver is going to probably 30x whatever gold does. So if silver's, okay, I'm looking at it now. Gold's at 1977 and silver's at 25. Silver will go to 300 and gold will go where it's going, but it's going to go to right around $300. So I would get silver because it's still cheap. I'm trying to get you guys the bang for your buck. I'm trying to get you guys stuff that if you only got $200-$300, you can still make out good. So I would buy SLV. I'm just going to just drop some stocks that I think you guys should take a look at. Not investment advice, but take a look at them, chart them out. I would buy SLV. I will buy JNUG. Obviously, SLV is silver and JNUG is gold. I got in this one, another one that I killed. I got in JNUG at $56.92. Right now it's at $90. And this thing is going to the moon. That's another one. So that's that one. I would get in Gush. Gush is at $1.88. I got in Gush back when it was $44, and now it's at $1.88. I would get in ERX. ERX is another good one. I got an ERX at 42, and it's at $60.89 as of April 16th. These are all the ones that I would get now that are going to do well right now. I would get in uranium. Uranium, you heard me mention that earlier in the podcast. I would get in UEC. I got in UEC when it was $1.86. It is now at $6.32. What else would I get in? I would get in DNN. That one still has some room to go. I got in at $159. It's at $175, but that's a good one. And what else would I do? I would also get into Alibaba. I bought Alibaba. It is a tech stock, but I got into it because it is super cheap. Alibaba typically trades around $259. The only reason it's doing what it's doing right now is because of all the things that's going on in China with the regulations and what they're doing with their companies. Right now, Alibaba's at $95. That is a steal. This thing was at $319 just November 20th. And for the whole, almost the entire existence, it's always been above 150 bucks. It was around 200 for 2018 all the way through 2020. And then it got up to 316 and then it took a dip. And so right now it's about $95. Charlie Munger, Warren Buffett's best friend, he went all in. I think 70% or something like that of his entire portfolio, he put it on Alibaba. So I'm just giving you guys, I think it's a great one. It's basically like Amazon, but for China, but it's way bigger because people in Latin America, even in the US, in Europe, Africa, they all use Alibaba, and Alibaba has a wholesale component to it. So not only does it have something like Amazon, but it also has a wholesale side where you can get things in bulk. Great company. I would do that one right now while it's definitely cheap. And what else would I do? I would do 10-cent music. Very cheap. I was in it when it was at 20 bucks, but the regulation hit it and took it all the way down to $4. And I would also get 10 Cent. 10 Cent is a great company. Right now it's getting beaten up. But 10 Cent is going to be a gem. Trust me on that. This thing is at $46 and it was trading around 76 through all of 2020. And it's a great company. The market cap of this one is about $450 billion. So to get something for $45 with a $450 billion market cap, you're getting a steal. So these are some of the stocks that I would get, man. You buy them and you sit on them. I would do options on them. I would do options for 2 years out. Spend the money. I did a 2-year option contract on Alibaba so 2024, I'm projecting the thing is going to hit around 195. Yeah. I mean, in 2 years from now, it should go back to the levels that it was. So that's what I would do, man. If you guys want to leverage the markets, get stocks, buy the stocks. Because if you need to, like I mentioned a couple stocks that I had that I was up like 9%, but I'm up 40% on the option. I'm still up 9%. If inflation's at 8.5%, I'm still keeping up with the cost of inflation with the stocks. So if I ever need some money, I'm just going to sell the stock. I didn't lose my position because at the same time that I bought the stock, I bought the option. I still got 2 years in this option contract. I can sell my stock, go out here, buy real estate, buy whatever I want to buy with it. And then once I sell it or do whatever, I just go back and buy it. I could be buying back in at a higher price. So instead of me buying it at 45, I could be buying it at 60. But what did it do? It kept up with inflation. So do I really care? No, I don't. If my money would have been sitting in the bank, I would have been getting killed. So I would have been down, 9% versus being up 9%. So that's what I'm saying. So regardless, if you buy the stock, you take it, you sell it, and you go do what you got to do with whatever you need to buy. And then you buy it, and if it's at $60, then you come back. You come back in at $60 and you ride it back up, especially if you know that this thing is going to go back to 195 or 200. You just ride it back up. Say I get in at 60 and I ride it up to 65 and I got to sell it to buy something else. Cool. I did it. I made money. I hopped out. I still got my option contract sitting over here going up at the same time. So this is kind of the strategy that I would have. I think you guys should be diverse. I think you guys should also, if something were to happen with the monetary system, I think you guys should own some silver. You can't just go out here and trade gold, right? You can't just be like, hey, bro, I want to buy these shoes. I got a 24 karat gold coin. You're going to be crazy to do that. But I would. I mean, silver is probably going to be a little bit more widely accepted than gold would. So I would go out here and silver's still cheap. You can go on Amazon and get like 6 rolls of silver coins for like $2,100. They were right around like 15 not too long ago, maybe like 6-7 months ago. It's 15, now it's at 21. So if you did that, you'd be up on that. So I think you go out there and you get some of those from Amazon and ship them to your house. Make sure you get the authentic ones. You do that. You try to get some gold, and then you still leverage these silver and gold plays by buying the stocks that I just told you. You obviously always want the leverage, but you also want to take advantage of being able to have hard assets in case something happens with the US dollar. I mean, you can go to Latin America, Mexico, Europe, anywhere with a silver coin and somebody's going to take it. I mean, it looks like a quarter. Like, it's money. So no one's going to say no. Taking a gold nugget and giving it to somebody, something weird like that, probably not. They're going to have to go and get it melted down and do all of that. And you can get gold coins too, but I would stick with buying all of them and putting them in a safe or somewhere in your house for you to be able to use them. But hard asset, guys. If you can buy land, you can't get any more land. I was looking at a land plot in the community that I wanted to buy in Orlando called Isleworth. You guys might have heard of it. There's a lot of Shaq and all these other people that live in there. And I was looking at land plots in there. And the land plots were going for $250,000, $300,000 again back in October, $550,000. And then you obviously build your own house on it. But you can't get any more land, guys. You can't buy more land. You can't create more earth. So if you can buy land somewhere, whether it be in the U.S. or somewhere else, I think you buy land. I was looking at buying land in Colombia. You might have heard me mention that. So I didn't get a chance to go over there at the beginning of the month to go look at the land plots. I had to take care of some stuff. But I'm going on the 27th. I'll be out of here. So I'm going to go take a look at some land. And so at some point in time, I will build on that land or I will turn it into some kind of farm or something like that. So again, if I can't buy land in the U.S. because it's getting overpriced, I'll buy it there. I can still have a super nice house. I can get a way better house actually in Colombia for the amount that I would have paid if I bought that land in Isleworth. Obviously, it's not in the U.S., but who cares? I mean, obviously, the reason I want to get in the U.S. for my friends and my family, but I'll get on a plane, go to Colombia and hang out there on a combine for half the price that I would have paid for, me buying something in the U.S. So at the end of the day, I'll probably end up doing both, but it just makes sense for me to go ahead and get land right now in Colombia amongst other real estate because that market is going to always do well. You guys know how I feel about Medellin. I'm not going to run off on a tangent on Colombia and Medellin per se, but guys, I just gave you guys some good stocks to look at. They're all doing well. I gave you the percentage of gains that I've gotten in a short amount of time. A lot of those stocks that I mentioned to you, I just got into those, and you heard me say March 28th. Some of them were like April 7th, and I'm up that amount in that short amount of time. And this thing is just starting to run. My oil and gas stuff, like my gold and silver, I've been in that for a while. I traded in and out of those for a while. But the stuff that I just mentioned, like AUI, I just got in that. ET, just got in that. TECK, I just got in those. So these are all the things that I just got in, and I'm up like 60%. So trust that these things are just at the beginning because what we're in right now is the beginning. We are going to have an economic collapse. We are. It's just a matter of time. And so if you guys are poised and in a position to be able to take advantage, this is what I want you guys to do. That's the whole purpose of this channel. And so if you do well with the stocks that I mentioned and you get 20 or 30 or 40 or 50%, you take that money and you save it. You don't take it out of your brokerage at all. You save that money in there because you don't want to pay capital gains taxes on it. And then you wait until this real estate market turned and you go out there and you use that money, you buy real estate. And you can, depending on who your CPA is, if they're good at what they do, they'll be able to help you not take any capital gains hits. So you save that money, man. You do what I'm saying. Use the strategy that I'm giving you right now with the stocks that I'm in. I'm not telling you guys something that I'm not doing. So use what I'm saying. Get as much liquid as possible, doing the strategy that I just gave you, and then you get into real estate. That's where it is. Because if you think about it, if you get stocks, they do well, right? If you can get a house as an asset, you can have houses in multiple cities. And it's not going to be an issue because they're going to pay for themselves. So say you take this money from the stock market and this market crashes and you have the liquid available. I'm a lender, investfarcapital.com, and you got a 650 credit score, 600, or try to get to a 700. You only got to put 10 or 15% down to buy a house. All this money you've just made in the stock market, you take that money, you leverage it, right? You go out there and you put the 15 or the 10% down. You buy another house. If you want to buy a rental, you put the 20% down. Now you leveraging the money you got from the stock market, and now you got real estate. You take that real estate, you hook it up, right? Or you don't. You buy something that's already hooked up because somebody wasn't able to pay because they lost their home because we're in a recession. You take that house. People are still going to vacation. You know that for a fact. You get a house in a good area where you know people are going to be on Airbnb. I know these people that I've seen hanging out. I mean, I don't know them, but I know they're going to take money and they're going to go on vacation. get an Airbnb. When you're not in that place, you put it on Airbnb. When you want to go home, wherever this place is, you go there, you take it off the calendar and you live in it. That's one house that you got, that you getting, and it's getting paid for, that you own. You're making money off of it because it's on Airbnb or it's on VRBO. And that's a house that you can go stay in whatever city it's in. That's your house, right? You decorate it. Maybe you don't leave all your clothes in there, but leave some clothes in there. Or you just take a bag. You go on vacation and you just be like, look, I'm coming to my house. Boom, you in that house. Buy another house in, let's say, a city like Orlando. You do the same thing, man. So you have houses all across the U.S. or the world, and you put them on Airbnb. So not only are you getting the mortgage paid down, you're getting the cash flow from the Airbnb or the VRBO, and it's a house that you can have if you want to go stay in it for a month. And obviously, if you're doing any of these, you're making $6 or $7 grand a month. If you go and you take it off the calendar for a month, you've already made enough money to pay for that month that you're in it. So you got that house, say it be in Florida. Then you got another one in Texas. And then if you're smart, you diversify and you get into another country. You go to Medellin, you do the same thing. You can have multiple houses and they're all getting paid for by someone else at the same time. And you took this money and you got it from stocks, right? You got super cheap stocks that were low in value, that 10x, 50x. I mean, come on, man. Who don't want that lifestyle? Easy. It's super easy if you do what I'm saying and you just go by the strategy. What I'm saying is not hard. It ain't rocket science. You know what I mean? You look at what I just said and you do what I'm doing, you can have 10 houses somewhere. I mean, that's the game, man. That's what a lot of people do when they get to this level. Some rich people probably don't put their houses on Airbnb, but they might lend it to a friend who might pay them. Or they have luxury rental websites. I saw one the other day where you can go and you can rent luxury houses. It's an elite status of people that have their house on these platforms. So that's what I mean, man. You just got to know how to play the game, man. So I'm trying to show you guys how to do it. So stack your bread, do what I'm saying, have a house in every state, in every country, and take advantage, man. So anyway, guys, I wanted to hop on here and do something quick, give you guys a quick look inside my brain on what I'm doing and what my strategy is. And again, this is not investment advice, but it's something that I'm doing and I've been doing for the past couple of years, and it works. It's called cross-collateral investing. If you look at, I did a podcast on it. Go back in the archives and you will see I did it in 2020, I think. It's a good strategy. But anyway, guys, Real Estate Investing Diet is coming out. It is shipping on Monday. You'll be able to get my book in Amazon, Barnes & Nobles, all these different places. So it's shipping on Monday. You can go to my website and get it pre-order, or you can just wait. I think the listings are going to hit all the major bookstores in June. So if you want to get it before that, you can always go to my website. You can also go to realestateinvestingdiet.com. There's a lot of information on there. You'll be able to buy the book from Amazon on that website when it does get listed on there. But in the meantime, like I said, if you want to pre-order in advance, I can ship it to you in about 2 weeks. And you can go to andrestewartauthor.com and pre-order the book there. There's also a second book coming out. You can take a look at it on there. You can read up on what that book is going to be about, but it's a great book as well. But realestateinvestingdiet.com or andrestewartauthor.com. And be on the lookout for the Real Estate Investing Diet, man. That book is going to be great. It's basically breaking down the strategies that I always tell you guys about real estate and how to get those properties without putting money up, man. You can get properties without any money out of your pocket. It's a really great book, and I'm not saying that because I wrote it, but I just know that the things that I talk about and ways that I'm able to create new money blueprints for people because of my NLP background, it's an awesome book. So take a look at it when you get a chance on the website, andrestewartauthor.com, and get it when it comes out. But anyway, I will see you guys on the next episode. Take care and have a happy Easter.
Aren't you ready to start a business or grow your real estate investing portfolio? If you answered yes, allow Andre and the expert advisors at the Residual Roads Business Institute to fast track and put you on a path to full-time investing. The greatest transfer of wealth in our lifetime is occurring over the next few years, and you can take advantage if you know what to look for. In order to be successful at real estate investing, you need to learn how to leverage your current resources to generate quick money, big money, and retirement money. Let Residual Roads advisors craft a plan to get you through these phases using little or no money in 6 months or less. Don't wait for a job. Create one for yourself and others. Go to residualroads.com for mentorship, and for our free course, go to residualroads.thinkific.com.